From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming November 6th Forex session. And the pair in front of you is the dollar yen. We normally feature the euro dollar, but in this presidential election session, this pair, without a doubt, will be one of the more interesting ones to follow, and quite frankly, could be the biggest mover. As you can see, I have the 80 handle drawn out with a purple line. This is an area that has been of interest to the pair, and I will draw out what I see right now, at least, as a bit of a double top. We find ourselves testing this area, and it's roughly 80.50. And to put a little background perspective in this pair, you know that the Bank of Japan is lower than the market right now and supporting it because they are trying to weaken the value of the yen. That being said, we have competing central banks. We have the Fed up top trying to drive the value of the dollar down. Now, the Fed isn't necessarily worried about the yen, but the fact that the Fed is buying up treasury bonds in the United States has a negative effect on the dollar versus the yen in general and in most currencies. With the Bank of Japan's aggressive bond buyback purchases and assets as well, they actually go into the stock markets and buy certain companies at times. This pair has found some type of footing, and now we're to the point where we really are starting to look like we're about to try to break out. This coincides with the election. From a technical standpoint, you can see I have three moving averages here. It's the 50 in red, and the light blue color is the 100, and the purple is the 200. You can see that the 50 has crossed them both, and now the 100 and the 200 look like they're about to start crossing as well. Very bullish sign. We think that the catalyst is coming in the form of the election. Reading most of the world's press and most of the world's newspapers as you go around, it appears that most journalists around Europe, Asia, expect to see President Obama get reelected. As somebody who lives in one of the most important counties in the United States for the election, it's the place where everybody's fighting, I can tell you that the election is much closer than most people outside of this country understand. Because of that, it appears that the Forex market may be a little out of balance, if you will, leaning perhaps in the wrong way. If we get a surprise Romney victory, this will be epic in its effect on the US dollar, and it will be shown in this pair probably more than many others. Mr. Romney is very anti-Mr. Bernanke. There will be no Chairman Bernanke at the end of his term at the end of 2013. As you know, markets try to anticipate future interest rates, and if that's the case, we should, by all means, see this pair rise. And the reason, of course, is the central bank in the United States Federal Reserve will have a little bit tighter monetary policy while the Japanese continue to pummel the yen. At that point in time, this two-country race to the bottom, if you will, that America has been quote-unquote winning, will suddenly become the Japanese beating on their currency, and the Federal Reserve perhaps taking a little bit more of a hawkish stance. The quantity in Obama is already known. We know that Bernanke will be welcomed. We know that more spending programs will be welcomed as well, which means more Federal Reserve buying of Treasury, and that keeps rates artificially low. That's essentially what they try to do. By becoming a huge purchaser of bonds, this drives the interest rates down, and it makes money less attractive, or it makes bonds less attractive in the United States. So, of course, it works to weaken the dollar. If that ends, this becomes a one-way race. And that's why I think that this pair has the most potential to offer the most bang for your buck in the election. If Romney does pull it off, and quite frankly, most of the polls are too close to decide one way or the other, this pair could spike, and it could spike big. We could be looking at an 84 handle in very short order on a Romney win. Above 84, at least for me, I have this as a buy and hold pair. At that point in time, you're probably holding this much like you did back in the carry trade days. Also, you have to look at the opposite equation. If Obama wins, we could see a sell-off in this pair, and I would expect it to sell off a bit. But if that's the case, we still have the Bank of Japan working against that, and that being the case, we should return to the status quo. We should return to this consolidation area. So certainly the risk to reward ratio is much better to the upside with a Romney win. If you look at this from a weekly perspective, you can see that I have the 84. Let me go ahead and close out these indicators. You can see that I have the 84 level marked off, and then after that, the next serious resistance is going to be about 88. And you can see that we could really start to see a significant turnaround. Also, one thing that's interesting is we now have a higher low. So if this continues, we really could start to see some action in this pair. You also notice that we are essentially at a fairly serious trend line. So a lot of things are lining up in one spot. I think it might be a long night in the United States for the election. Quite frankly, I don't know that it's going to be a quick blowout or anything, but if we do start to see Romney pull ahead, this pair will be the one to watch. And if not, we'll probably just return to the status quo. Now, that could mean commodity currencies go much higher on an Obama victory. Gold would certainly do well. Silver would certainly do well. But this, for me at least, is the cleanest pro-Romney shock win type of trade.